Hey, what's going on, PFR Nation? This is Kevin Lau, your host of the Planning for Retirement podcast. This is part two of the Tax Efficient Charitable Giving Whiteboard Fireside Chat. Again, we're doing this in the wake of Helene, and ultimately when this video is posted, it's going to be the wake of Milton. And I'm just praying that the damage is minimal from Milton, and just praying that all the families out there that are in the path, in harm's way, that are evacuating that and stay safe. But in light of a lot of the bad going on with regards to the storms and these hurricanes, many people are giving to charities and are finding charities that are helping out the families that were impacted by both Helene and, of course, by Milton as well. And so I thought I'd do this whiteboard fireside chat, as I mentioned in part one, to ultimately help people understand the tax deductibility of some of these donations, because it's a little bit confusing on how these work. So today's video is going to be dedicated for those of you that are over the age of 70 and a half that have an IRA. You could potentially unlock some tax-free distributions from that IRA that otherwise would have been taxable. Okay, so we're going to break down. Why don't we jump into the whiteboard here? We're going to break down what this is. What is a qualified charitable distribution? Okay, and so just to recap from the last video, if you haven't seen it already, go ahead and watch part one either way. Because it's helpful and it could be valuable. Even if you are over this age of 70 and a half, you might benefit from the other strategy I mentioned, which was the donor advised fund. But ultimately, the reason you might consider a qualified charitable distribution is because, donating to charity, while obviously you want to do good, you want to help that charity out that's doing good as well. You want to make sure you can maximize the deductibility of those contributions. And because of the Tax Cuts and Jobs Act of 2017, most people are not itemizing their deductions. Okay, most people are just simply taking the standard deduction. And if you're just taking the standard deduction, which for singles is $14,600 for 2024, and then for married filing jointly, it's $29,200. And of course, there's a little extra deduction if you're over the age of 65, as well as if you're blind. But essentially, if your total itemized deductions don't exceed these numbers, really what you're donating to charity is not adding any value to you. Okay. And so the donor advised fund, what I mentioned last time, this idea of bunching your donations into 1 year so you can take the actual deduction for those contributions, because then that bunching would essentially push you over that standard deduction limit and allow you to deduct your itemized deductions, not only your charitable donations, but also things like your mortgage interest if you have it, or SALT taxes or state and local taxes, or medical expenses that exceed 7.5% of your adjusted gross income, etc. So this is for folks that are over the age of 70 and a half. Okay, so if you're over the age of 70 and a half, you qualify for a qualified charitable distribution, also known as a QCD. Okay, now you must have a traditional IRA. You must have a traditional IRA. Okay, and this can't be an inherited IRA, by the way. I've heard this before as, hey, Kevin, I have this inherited IRA. I'm taking minimum distributions. What are the rules there? But if you have an IRA, you can donate via QCD up to $105,000 in 2024 to a qualified 501c3 organization, which is very important. Little Johnny, your grandchild, is not a qualified 501c3. But if you donate $105,000 in the year 2024, you can donate up to that amount to a qualified charity, and you would have no taxes on that distribution. Whereas otherwise, if you took a normal distribution at that point in time, there would be no 10% penalty because you're over the age of 59 and a half. But presumably you're going to be paying ordinary income taxes on that distribution from that tax-deferred IRA vehicle. So basically, the QCD allows individuals that are over 70 and a half to contribute to that charity directly in the amount of this per year, and you can do this to multiple charities. It doesn't have to be one charity. So if you like 3 or 4 charities that are doing good, that are helping the victims of Helene and for Milton, you can donate to 3 or 4 or 5 or 6. It doesn't matter. Okay. Now, sometimes the custodian that you have your IRA with, maybe they have their own process, and sometimes they might have a minimum amount that you're able to donate. Like you couldn't donate $5 and do that as a QCD. They might have a minimum of, let's say, $50. But again, just check with your custodian, see what the rules are. But essentially, what you're going to do is you're going to fill out a form that says, hey, I want to take advantage of this qualified charitable distribution. Here is the charity that I want to donate to. And again, it must be a qualified 501c3. Your custodian is not going to check this for you. So you must check it. And I'm going to show you where you do that in just a second. So you must check that it's a legitimate charity. And then the IRA or the custodian of your IRA must send the funds directly to that charity. It can't send the check to you and then you donate it. It must send it directly to the charity. That's how you can qualify for the 501c3. For the qualified charitable distribution. Okay. So that's all great. All right. Now, what's even better is if you are taking required minimum distributions. So if you're over the age of 73, and then for some of you that are upcoming, it might be age 75, but if you're already taking required minimum distributions, it will satisfy your RMD dollar for dollar up to this $105,000. So let's say your total minimum distribution, your required minimum distribution for 2024 was in fact $105,000. You could hypothetically, assuming you didn't need any of that for your living expenses, maybe you have a pension, maybe you have Social Security coming in, maybe your expenses are pretty low and you're like, you know what, I just want to do good, I want to donate to charity. You could donate this entire $105,000 directly to that charity via this qualified charitable distribution, and that would satisfy 100% of your required minimum distribution. Why is that important? It's important because it doesn't matter if you itemize your deductions or take the standard deduction. You're essentially just reducing your RMD dollar for dollar. So in effect, it's going to reduce your taxable income and your adjusted gross income without even taking a tax deduction for it. So you could do this 105, and then you could just turn around and just take the standard deduction, assuming you're married filing jointly, of $29,200, and that's $29,200, and that will also be an additional deduction for you. And what's cool about the qualified charitable distribution, it doesn't show up on your tax return at all as income. So unlike some things that are deductible from your taxes, it's not going to be added back at all for things like IRMA calculations or income-related monthly adjustment amounts. Very, very, very important. Okay. So it's in effect, again, I'm not a CPA. This isn't tax advice. Check with their tax professionals. But in effect, it is more efficient than a tax deduction because it's essentially reducing your taxable income dollar for dollar without having to consider whether you're itemizing or taking the standard deduction. So again, in summary, it's great for folks that are over 70 and a half that want to do good. They have a traditional IRA that's in their name. You can donate up to this amount adjusted for inflation. Again, I'm doing this video in 2024, but if you're watching this in 25 or 26, that 105 will just be simply adjusted for inflation going forward. And that's not going to show up at all on your taxable income. But even more powerful, if you are taking required minimum distributions and you want to take advantage of these qualified charitable distributions, that will reduce those RMDs dollar for dollar, which is really, really powerful. Again, how do you qualify? You must be over the age of 70 and a half. You must have a traditional IRA. It must be in your name. Okay. So you can't donate an inherited IRA. You can't do that. No inherited IRAs. Okay. It can't be a 401k or a 403b, right? Or a TSP. Can't be any of those. It has to be a traditional IRA. So if you want to take advantage of this and you have the ability to, you can roll over those dollars from a 401k into an IRA and unlock the ability to do those qualified charitable distributions in the future. And then, of course, it must be a qualified 501c3 organization. So how do you make sure it's a qualified 501c3? The best way to do it, in my opinion, is to go to the IRS website. And this is what I did is I just searched tax-exempt organizations here in the search bar. And then you can see this show up here, this tax-exempt organization search. Click that link, and then it'll take you here, and you can just type it in by the organization name. And then ultimately you can dig in and just make sure, okay, this is a legitimate organization. This is the organization we decided to donate to after Helene, just to help the families that were impacted in East Tennessee and the Tri-Cities area. And then boom, yep, this checks out. And you could even dive into some of their financials if you'd like to look at their tax returns and making sure that they're, using the proceeds for, good causes as opposed to pocketing all the profit. So, which does happen, unfortunately. But yeah, make sure it's a 501c3, qualified 501c3. But then one step further is you need to make sure you document this properly. Okay. You need to make sure you document this properly. So keep your receipts. Keep the receipt or the acknowledgement from the organization. Typically, they'll send you an email or write you a letter and say, thank you for your donation. Keep that receipt. And then also just make sure you provide this information to your tax preparer. Okay, because here's what happens is, let's say you custody at Charles Schwab. Charles Schwab is going to send you a 1099. And let's say you did $105,000 as a QCD. Okay. Well, they don't really care because, again, they don't want to be on the hook for, double checking to make sure it's a qualified 501c3 organization. So they're just going to give you the 1099 and say, hey, you distributed $105,000 as a distribution. Okay, so they're going to send you that 1099-R. And what you need to do is provide the documentation to your tax preparer that you donated. So let's say you did the entire 105. On your tax return, you should see $105,000 as an IRA distribution. And then in the box next to it, it should say $0 as the taxable amount, as the taxable distribution. Let's say you did a blend. Let's say $50,000 was the QCD and the other $55,000 you took as RMDs. Well, then you would have $105,000 would be your total distribution, of which $50,000 was non-taxable, okay? Or $55,000 was a taxable distribution. So again, make sure you document this. Your custodian will not break down whether or not it was a QCD or just a regular taxable distribution. You need to provide that documentation to your tax preparer. I see this missed all the time, especially if they're kind of smaller donations. You're not really looking at this, a ton. Maybe you're doing monthly recurring QCDs to your church. Maybe the amount of $500 a month, and all of a sudden it adds up to $6,000 at the end of the year. Make sure you tell that to your tax preparer so you can actually take advantage for that tax efficient charitable gift. So that's it for this fireside chat, everybody. I hope you guys found this video to be valuable. If you did, make sure to like it, make sure to share it with a friend, and make sure to subscribe to our channel. We do podcasts on an every other week basis or bi-weekly basis, and then these whiteboard fireside chats I'm posting twice a week. And if you guys have any ideas or comments that you want to see, or sort of whiteboard breakdowns that you want to see, make sure to drop them in the comments below. I read all of them. And again, I appreciate all of you, PFR Nation. Until next time, this is Kevin Lau signing off.